what you have are a list of stocks that we have that we maintain a bullish view on. And what you at the beginning of the report, you're always going to see a list of all the current stocks in our portfolio, whether we're bullish or bearish on it, and when we first added that symbol to our portfolio. So as you can see, some of the names that we added earliest, like such as Shopify, Lululemon, Square, and Disney, these are some of the ones that are up a fairly significant percentage. And you look at Shopify up 61%, you look at Square, Lulu, and Disney, that's up 20, 30%. This is really where when we utilize these deep in the money call options and leverage our capital about 5 to 1, you're going to see instead of 20, 30% returns, you're going to be looking at 100, 150% returns on the same move, especially if we're able to sell some calls against it and offset, excuse me, some of the time decay on the options themselves. The goal is to be able to amplify the research report ideas from these 20, 30% moves in the underlying into 100, 150, and sometimes even substantially more than that, such as the example that Brian will show you with NVIDIA here in a couple of minutes. But these research reports that we send out, and what I'll do is I'll use NVIDIA just as an example to walk you through. What you have is going to be a underlying chart for where the stock is currently performing, and then what we do is we give you a breakdown of why we like the stock from a timing perspective, meaning from a technical perspective, and why we like the stock from a fundamental perspective. And we always break down 4 key fundamental metrics that I use at the core of my analysis to better understand whether a stock is undervalued or overvalued. And you're always going to see the same 4 metrics every single time, so that when you look at this, when you're looking at a new idea that we print out here, you're always going to get a consistent understanding as to whether or not you agree with our underlying research. So generally speaking, these trades fall into 3 different categories. They can either be trend following, they could be counter trend, or they could be outperform. Effectively, what we're doing is we're either trying to capture a continuation of an overall trend, we're either trying to capture very early beginning of a trend, or we're looking at a stock that is simply just outperforming those momentum stocks that have the opportunity to really take off, like we've seen with Shopify and Disney and Square over the past few months. So what you're going to get is an understanding of what type of strategy or what type of scan does this specific stock meet. You're going to give you a quick overview of the technical levels that we're paying attention to, what are important support and resistance levels, what are our specific targets on a specific stock, and then more importantly, I always think that there are thousands of stocks that you can scan from a technical perspective, but once you dive into a specific stock, once you look at the fundamentals, you can screen away probably 90 to 95% of the symbols that come up. And that's the part that actually takes a lot of time, because the fundamental part is hard to do algorithmically. It takes a lot of manual time to actually go through the fundamentals, understand a company, understand how they make their money, and then look at the valuations. What we expect the company to grow, how fast do we expect that company to grow, how profitable are they? And those are the primary metrics that go into understanding the valuation of that stock. And what we try to compare is the valuation of that specific stock to its industry, and whether it's trading at a premium or discount, and whether it should be trading at a premium or discount relative to that. So we always break that down to you. So looking at NVIDIA, I think we're all very clear as to what NVIDIA does and what the specific outlook here for NVIDIA is with regards to their manufacturing of AI related chips. We do expect demand for these chips to remain incredibly strong here over the next couple of years, which is why you have the first fundamental thesis for NVIDIA. But then if you look at the fundamentals here, right, even a couple of quarters ago, this was the stock trading at 40, 50 times forward earnings, which is hard to grasp your arms around as to whether or not it's worth continuing to pay those types of valuations for. But over the past couple of months, the stock hasn't really moved much, right? So if you look at this, back in June, the stock was at 140. It's now trading at 145 now. So basically, in the span of nearly 6 months, the stock hasn't moved much. It's been choppy and it's consolidated a little bit. But since then, revenues and sales have grown substantially. So what that means is that we're trading at a much reasonable valuation here. We're trading at 32 times forward earnings, which is still a 50% premium to the industry, which is expensive. But if you look at how fast is this expected to grow, 64% EPS growth versus the industry average is 13%. So you're talking about 5 times faster EPS growth. Revenue growth is expected to be about 8 times faster than the industry. So, and if you look at profitability, the average net margins in the industry is about 20%. NVIDIA is at 56%. So, we're talking about leaps and bounds more profitable. And actually the net margin, metric, I think is actually a bigger driver of valuation than growth. So when you put all this together, the fact that it only trades at a 50% premium relative to its industry, from my perspective, is incredibly cheap. And that's why I think that even though it's trading at a high valuation, there is still plenty of upside, especially now you've seen this consolidation. You've seen the breakout here above 135. It's now retested this level twice as support, confirming that support level is holding. And this is really where the upside opportunity lies. So that's an example of the trade structure that we will lay out for every single trade idea that we post. I'll give you one more trade idea just to show you kind of what we've done here. Alphabet was one that we added here today as well. Very similar to NVIDIA. Basically, this stock, if you look at this over the past nearly 9 months, has really not moved, right? This was a $170 stock 9 months ago. Back here in April, it's still a $170 stock now. But economics for this particular company has changed quite a bit. And now the fact that it's trading at only 19 times forward earnings, even though it's expected to grow EPS and revenue faster than its industry, and it's far more profitable than its industry, yet it trades at a slight discount to its industry. That's really where the opportunity lies from a fundamental perspective. And then you look at it from a technical perspective, the chart layout is very similar to NVIDIA. The 170 has been this is 167.5 has been a resistance level. We broke out above it, came back to retest this as support, and now we're bouncing off of it. So at the very least, what I'm shooting for is an upside around 192, but I think the upside potential here is actually looking at it well beyond 192, especially if you look at it from a valuation perspective. I think this should probably be trading at least 23, 24 times forward earnings rather than the 19.5 that it's trading here right now. And that would imply a breakout here well above those all-time highs. So these are the types of opportunities that we're presenting to you where the technicals and fundamentals align. We will tell you kind of where we are bullish on the specific stock, and we will also maintain a list for you to show you when we are bullish, how long we've been bullish on the specific stock, and we'll continue to update you on a specific stock until we are no longer bullish or bearish on that specific stock. And that is what Brian's going to be pulling from when he presents these deep in the money call options to help amplify the returns that you're seeing on this particular screen, hopefully from 30, 40% returns on the underlying into well over 100% gains on the underlying by trading a leverage portfolio using a deep in the money call option that still provides downside protection to the downside.